numbers. Let's go through them, Lauren.
Yep, I sure do. 22,000 jobs added in the month of August. That was much less than the expectation of 75,000, guys. The July number was revised. I will get to revisions in a moment. Unemployment rate coming in as expected, 4.3%. So that would be higher than July's 4.2%. Again, 22,000 jobs added in August. Let me get you the revisions because this is what everybody is focused on. For June and July together, combined 21,000 jobs lower than previously reported. I'll categorize that now. So you see for June, it was revised down by 27,000, getting you to negative 13,000, and the change for July up by 6,000, getting you to 79,000. Healthcare added 31,000 jobs, guys. The federal government continued to decline. Federal government in August down 15,000 and is down by 97,000 since its peak in January. Manufacturing employment changed little, down 12,000, down 4 months in a row, down 78,000 over the year. I'll send it back to you as I continue to go through this report. But as you can see, the market, at least the Dow, lifting off the lows in the pre-market on this data, weaker than expected.
It really did, Charles Payne. And really quick, I just want to say here, private payrolls coming in. The expectation was 75,000. We got 38,000. And there was a loss of 16,000 jobs in government, which I think Lauren mentioned. But again, you know, that 22,000 number, Charles, it's a weaker than expected number. And these revisions are pretty brutal.
Yeah, extraordinarily. You know, gone through. I mentioned healthcare, 31,000. The 12-month average is 42,000. That had been obviously a massive driver, and we know the demographic situation there. Just a little disappointed. Manufacturing was hoping to maybe see something there. But it's just, I think for the most part, if there was a whisper number, and I'm sure there was, this might be right where the whisper number is. And this is a sweet spot, I think, from the market's perspective. You can see the major averages are moving higher. It's not so bad that we're thinking recession, but it's bad enough that we think maybe the Fed could be much more accommodative beyond September.
Yeah, and also, too, Jody Biley, labor force participation rate, 62.3%. Your reaction?
Yeah, so we're not seeing much movement in that number, which is disappointing and surprising, to be honest with you, Cheryl, because we're seeing that there is starting to be some increase in the weekly jobless claims. And so I like to look into that number and say, are we seeing more people say they want to participate in the workforce? I also think this report is a little bit more of the same. The jobs are in healthcare, they're in leisure and hospitality. We've lost jobs again in the professional business service sector. We've lost jobs in this report in the temporary help sector, which is not a good sign. So there's a lot of concern. Even though the private payroll number is 38,000, that is still a pretty weak number. But I have to point out, again, I think the last 3 years of job growth has been a bit misleading because the top line numbers really were just talking about healthcare and leisure and hospitality. And we've been struggling in manufacturing and in construction, in professional and business services. That's where we need to get this economy back on track and see some of that job growth coming in the future, especially in trades. There is a real demand, and we're even seeing like Gen Z has a lot of interest in the skilled trade positions. And so we need to create those opportunities, which I know the Department of Labor and the Trump administration is very focused on right now through apprenticeship programs and upskilling and reskilling. But that's where we need to see some of the job growth come in the future.
Yeah, no, and John Lonsky, one thing that the government, I'm in the report right now, they said that any job gains in healthcare were partially offset by losses in federal government and in mining, quarrying, and oil and gas extraction. That story, John Lonsky, is going to change because we had the Interior Secretary Doug Burgum on last hour, and he talked about that they are fast-tracking, not only making sure that mines like a copper mine in Arizona get opened up, but that we start to export more energy to our European partners.
That's very important. Exporting natural gas to Europe is very important. And likewise, we have to do more to develop our copper resources, rare earth minerals, and so on. But make no mistake, you know, this is a weak jobs report. And I can't help but think it would be helpful if we got a lot of this trade-related uncertainty out of the way. along with perhaps maybe a 50 basis point reduction in the federal funds rate come September 17th. Monetary policy has to work alongside tariff policy in order to put this U.S. economy on a solid, convincing growth path.
Yeah. Jacobino, what do you make of this?
Yeah, look, I totally agree with what the two panelists just said just now. Private payroll growth has been a problem for a while. Ex-healthcare, education, government, and kind of government contractors. Employment's been negative for some time. It's been at least 18 months of negative payrolls there. We talked about this public to private handoff in the economy when we went into this year. It's going to come with some pain. The things that have been done, vis-a-vis DOGE, for example, you're going to see the government numbers get worse as you move through the balance of this year because you've got that 75K plus that took the deal that's going to hit the numbers over the next several months here. You're seeing healthcare slow down. You're seeing education slow down. So yes, that's happening right now. But if we can unlock the multipliers from the positive CapEx provisions that were in the OBBB, I think you could actually have a catalyst for private market job growth. I also think you do need to temper the temperature on the tariffs. Companies are paying for the tariffs. They're seeing it come through in margin pressure. And this is adding some net downside to hiring decisions as well.
It's interesting he brings that up too, Jerry Storch, because, we've heard from companies in earnings. We heard from Chipotle and Kroger, Procter & Gamble, and they talked about how consumers are becoming much more price sensitive, not just with tariffs, but also too with the unemployment situation, if you will. So what do you think that means?
Well, that's been true for several years. Originally, it was inflation that was driving this extreme price sensitivity and sort of a migration to buying necessities and using all their money for those kinds of things. The recent retail earnings reports that we got actually were pretty good. You saw good numbers, better than expected for people like Macy's, for example, which that's luxury for a lot of people. So I don't think we're going to see this sustained as we go into the fall. I think people are feeling good. For all the talk about the tariffs, there's no like tariff-geddon or something that's been affecting retailers or consumers. You do not see that in the numbers. There's a lot of talk. Like you said, people are saying that, but you don't see it when you look at the results. Company after company over the last 3 weeks have reported pretty darn good retail sales and earnings numbers.
Tomas, what do you make of this? I mean, again, I mentioned this before we got the numbers, that this is the first report that we've gotten since President Trump fired the administrator for the BLS, the commissioner. But at the same time, it's going to take months to make meaningful change in how the data is collected. We have to trust this data. The street has to have this data. At the same time, the way that the data is calculated is pretty arcane. I mean, the fact that you're still sending out faxes to companies, and the report rate right now, the last time I checked, was 43%. That's the response rate. That means that the data that we get is not great, just on the surface.
Yeah, I think what you see with the Trump administration, I think, is different from other administrations, that if things don't perform within an agency, you move on to new people. And that is, in government, you never really get accountability. And that's what you're seeing. This woman who headed it up could be the nicest person in the world, but the performance of the data is very, very poor, particularly response rate. And that's not just given. You can do something about that. I propose that we basically compensate people more to participate in this service. If there's a government survey, they should get some kind of tax relief for participating. That will dramatically increase response rate, essentially. In the private sector, that's done routinely, right? So the fact that you have a bad response rate is not something that you can deal with, and they haven't dealt with or not been able to deal with it. So I think it's time for EJ to come in and see what he can do. It has a lot of good proposals, and I think it's going to be improving dramatically.
Yeah, that's interesting. That's an interesting thing that he just brought up, Charles. Like, maybe compensate for businesses that they're willing to respond, so that we get more accurate data with all of this. And the other thing too, Charles, is now what does the Fed do? I want to point out the market has come back over the last 10 minutes. We were down almost 100 points. We're now down only 42 on the Dow. So you got to wonder, Charles, what this means and what this means for the Fed decision.
Yeah, I mean, the market likes this from the Fed's point of view. I think it means maybe we'll get a rate cut at each meeting this year, and then maybe some even early next year. The labor situation has always, in my mind, was, we look Thursday, right? Initial jobless claims and those kind of things. That's not where the crisis is. The crisis is that people are not being rehired. So 27 weeks and longer, up another 104,000. That's at 1.93 million. A year ago, it was 1.54 million. And that's where the real crisis is. And you couple that with a lot of young folks coming out of school and they can't find a job. So there's a labor crisis. On the tariff front, you look at U.S. goods, consumer goods as a percentage of imports, and it's cratered dramatically. People are not going to pay up. If prices, you can put a price up, but people aren't going to pay up. So you may have more of a deflationary situation there, which I thought all along. By the way, a history lesson, folks. That's what we had in the 1930s. It was deflation, not inflation. That was the greatest inflationary period of all time. So, kudos to these businesses that know how to operate. That's why these CEOs make $30 million a year. Not the CEO of Lululemon today, but the rest of them, to Gerald's point. And so I think, listen, we've got a dynamic economy. It's a big economy. It's struggling a little bit right now. And to the rescue, again, the point has been made here. Jake, we've got some things in the pipeline that really should give us a good 1-2 punch next year. Lower rates along with more organic growth in this country, fueled by the One Big Beautiful Act now.
Well, and Joni, I love that point that you made earlier about training and about making sure that there are industries and types of jobs that we need to be focusing on. And it is jobs in the manufacturing sector. I'm looking at this 12,000 job loss in manufacturing. That's going to change. That is, if President Trump has his way, the administration continues to push forward with onshoring, more manufacturing, whether it's his AI data centers or whether it's copper bathtubs, take your pick, Joni. That means that we will see all of these jobs numbers completely change. Maybe it's 6 months, maybe it's a year. I don't know.
Well, it's coming, Cheryl. You're absolutely right. There is a tremendous amount of focus around manufacturing. And when we think of manufacturing, these are going to be technically enabled, jobs that require high technical skills. And we are going to have to focus on training, upskilling, reskilling workers in the U.S. So when you look at the numbers today, the data point around unemployment, it's a bit scary. In fact, if I look at the report, that's probably what scares me the most, is that the household survey, we are now seeing we have 7.4 million unemployed people in the United States. And for the first time since the pandemic, we saw that the JOLTS report came out, and we're down to 7.1 million openings. So 7.2 million openings, 7.4 unemployed people. Like, this is the first time we're seeing more unemployed people than jobs. But the challenge is the jobs that are available require skills. The top jobs trending on LinkedIn right now are AI engineers and consultants. That is certainly one that is like a hot job that people are looking for. Also, jobs in sustainability are also trending, and then the trade opportunities. But all of those opportunities require specific skills, education, and to your point, the jobs are coming. We need to get American workers ready for those opportunities. And employers need to play a role in that as well.
Yeah, John Lonsky, that's the economic story. That's the engine of the country.
That's right. Jobs growth and good training matters greatly. I want to point out something on the unemployment rate. Overall, the unemployment rate a year ago was 4.2%. August 2025, it's only 4.3%. That's a slight increase. But if I look at the unemployment rate for Americans aged between 20 and 24 years of age, the unemployment rate soars from 8% a year ago to 9%, nearly 9% this year. And that's where you're having a lot of weakness in the job market. And that's also where I find you have a much lower rate of labor force participation compared to what held just prior to COVID. Those are the recent college graduates. Those are the people just entering the workforce. That's not a good sign.
And Tomas, talk about that economic story as well and what you see happening in the next 6 to 12 months, in particular under all of these proposals coming from the Trump administration.
Well, I mean, we've seen a lot of data, but remember that's backward looking, right? With all the three past months and jolts and private data on the job market, etc., all backward looking. If you look at the future, the investment data is really strong, and that's forward looking. People are investing because they think something is going to happen in the future, essentially. Obviously, the markets are very, very strong. That's also forward-looking. So I'm a lot more optimistic than what the past data, which is reflecting this churn period where we had a lot of uncertainty going on. I'm hoping that uncertainty is kind of settling down now with the tariffs coming into place. And I think the market and investment data indicates that people are a lot more optimistic than these past data.
I'm looking again at markets and just want to reiterate here, Charles Payne, that we are seeing the numbers have come back since that number crossed. It's now been 16 minutes. What do you think happens today? Where do you think stocks go?
I think we rally today, and when I'm looking for within the market, although Broadcom had this beautiful beat, there was a lot of secondary and third level names that did extraordinarily. The reactions to these earnings have been absolutely phenomenal. This is one of the best beat rates we've ever had. I'm talking bottom and top line. And so we carry that momentum. We carry the revisions momentum. We know that we're going to have a friendly Fed on our side. So I think we could finish at a new all-time high today.
What do you make of that, Jake?
I think it's a Goldilocks number for equity markets because it's enough that the Fed kind of restarts its rate cutting here. I totally agree with what Charles said, but it's not bad enough that the economy's falling off the rails, the wheels are coming off. It tells you that businesses are managing costs. They're managing labor costs in particular as they go through tariff uncertainty about the economic outlook, et cetera, but they're doing it wisely. And so I think, again, it's kind of Goldilocks here for equity markets.
Yeah, and Jerry, too, I mean, this is all pointing now to the Fed, and that's the next moniker that we have to discuss and look at. And what does Jerome Powell and the Fed do? And, I was looking at these comments from Christopher Waller. He, of course, was one of the dissenters at the July meeting. He believes that we should have already started to cut rates. We have not. President Trump has been very clear. He thinks Jerome Powell has been too late in cutting rates. Christopher Waller had said about the labor market, and this is, he broke with his colleagues at the Fed back in July. I worry conditions could deteriorate further and quite rapidly. So if we see in the next couple of months this jobs story, this picture deteriorate fast, you could be looking at we could get 100 basis points out of the Fed this year. It's possible. I'm not saying it's going to happen, but it's possible.
Well, for sure. This is great news for those who want rate cuts, and there's no doubt that something has to happen here. And so they're going to do it. How big it is the question. That's what you're asking. But I look today at like the retail index, retail stocks, the XRT. It's up on this news. So the general expectation here is that we're going to have a good fall. Rates will be cut. It's already built into the market at like 95% probability. And so it's all going in the direction that's expected. That's why I said at the beginning, I didn't mean to make fun of it, but I almost didn't care what this number was. As long as it wasn't extraordinarily high, we're in a very good place.
What do you think, Jerry, stay with me on this, though. What do you think about the immigration story and these job numbers? Because that's really still is the unknown. I mean, we do know, we've talked about, obviously President Trump has talked about the fact that farms need workers. There's been movement and some comments coming out from different congressmen, people about this contentious debate. But at the same time, some of these migrant workers are crucial for some industries.
Well, again, I can't believe, if we look at history here, that the administration won't react. If there's a real problem, they'll do something about it. They've already indicated a willingness to do that. So it's something I just don't lose sleep over. It's a little bit like when they announced those giant tariffs that were just kind of crazy. You almost knew that wasn't going to last. That isn't what we're going to see. So I hate it when we take something short term and project it like it's going to happen forever, and that we have people in Washington who don't learn when they see reactions to things and don't change what they're going to do. So I fully expect that that's all going to be dealt with. They're looking at it, that's for sure. Everyone's talking about it, that's for sure. So there's no doubt in my mind that that's not really going to be a problem in the end.
Joni Biley, same question to you about migrant labor.
Yeah, I think, history's shown us that legal immigration is always good for the overall job market, and we need that in the U.S. We're going to continue to do that. So I'm actually with Jerry on this point. I'm not losing any sleep over it. The administration certainly is very wise to what the numbers are and where the demand is needed. They just want to make sure that our immigration policy is going to align with bringing the right people into our country to meet the needs of America. And there certainly is a demand, and we need to make sure we do it correctly. But overall, immigration is very good for the job market.
And Tomas, I mean, we go through the wages, and we got wage data in this jobs report as well. But, if you do start to see pressure on wages to the upside, what do you think that means?
Well, I mean, we had a huge problem with the real wages under Biden, right? So real income was not moving much, and there's been a lot of interesting studying out of Unleashed Prosperity showing the huge difference between real wage data or real income under the first Trump administration, Biden administration, and now the second Trump administration. I think that's very, very important. But inflation obviously has come down, and in fact, CPI this next week is going to be probably irrelevant for the Fed, given this bad labor read, essentially. I think it's going to have to be an enormous number on CPI to move the Fed away from anything but cutting. I agree. It's just a matter how much. I don't think, the new personnel issues are going to affect it either, whether it's Miran or Cook. I don't think that's going to affect much of what the Fed is doing, certainly not in September. Maybe not the next one either.